Globally, markets are declining in 2015, and we look today at the real indicators of why this is occurring. We see the markets falling and the financial crisis part 2 taking effect. You came here for the truth, so let me unveil that for you. Let's get into this article out of CNBC talking about the S&P dipping below 2,000 points. And they get into a bunch of things here. In fact, that oil closing below $48 a barrel. It continues to decline. Oil hasn't found a bottom yet, and that's a concern for investors who may be extrapolating that the global economy is slowing down. Well, newsflash, everyone, the economy has been slowing down for years. In fact, since the crisis, it has been continuing. So there's no real indicator that you look at except for the US dollar and the US stock market in the recent past that are doing well. Everything else is going down. So let's get more into that as we see the Asian shares declining right now. Asian stocks continue to lose ground on Wednesday as further falls in oil prices together with concerns over the Eurozone's economy fueled investor worries. Well, there's a lot more than oil that you need to be concerned about as to why the economy is falling. And then they also said something that I've covered in recent videos. Euro hit a fresh 9-year low against the dollar. We're looking at a time when there is major turmoil occurring. We're looking at a time where markets are all out of sync with each other. And this is going to continue well into 2015. This is out of the BBC. I'd like to move on right now to talk about this, that we see every indicator that I've looked at, as I said, except for a very small amount of them, showing a decline that has been taking place for quite some time right now. It's not a new thing in 2015. But these are just a couple examples showing you pretty much all in a straight line going downward. And then the S&P 500, other than a few dips along the way, has been increasing in price. So this is just going to show you the disparity that has been formed over the recent past. And this has been all because of QE, as well as the practically transparency in the fact that the U.S. stock markets are being bought up by central banks around the world. That is being public information, and the US is not the only one doing this. I also uncovered how Japan is doing this. I've also uncovered how Switzerland is doing this. So they're all in fact doing this. Let's move on right here. This is John Ng saying, while everybody appears to be celebrating the record highs on Wall Street, we are also seeing a loss of public trust. One key example, looking at the $1.1 trillion spending bill in the US, where there was a dilution of the Dodd-Frank Act, which now allows for bail-ins in the United States. That is one of the biggest pieces of news that we need to realize, where bail-ins are becoming the future. All of the G20 nations gathered together in Brisbane, Australia, not too long ago to discuss the bail-ins, that this would be the new method. Of course, when they said that they're going to do this, they always ignore the fact that this means that they're going to take money from individuals' bank accounts. They said that, and this is really just really humorous, that they said they're going to use some special funds they have set up in case they ever need to be recapitalized. So I asked the question once again, if you have these special funds, why did you need bailouts in 2008 and onward? Why would you need the bailouts if you had this money? Why would you take our money to fund and fuel your accounts? And now the next time we're just going to believe that you're not going to need our money again? It doesn't make an ounce of sense. They put this on the books already. They did it in Cyprus once. You saw the bail-ins basically being put into the really onto the books in Canada, in Germany, in England, in all these different places around the world, which, by the way, I have a video coming up specifically on bail-ins where I will unleash this information about every single one and document it. But for today, let's just realize that this is continuing. All of the indicators are showing a crash coming. And speaking of other bills that have taken place in acts. We saw the Bretton Woods Agreement being formed in 1944 near the end of World War II. And basically what this did was made the US dollar the reserve currency of the world. This is obviously going to give them a monopoly, and it has continued until today because they're able to do whatever they want, print as much currency as they want. And even though everyone on the face of the earth knows that the US dollar is going to eventually go down, they're still riding on this ship because they believe it is at least stronger than the rest of all the garbage currencies out there. It's pretty interesting to see this kind of thing happening when, even though the fundamentals show they still go with yes. This is out of Reuters. Germany is making contingency plans for the possible departure of Greece from the Eurozone, including the impact of any run on a bank. And this is according to one of these newspapers here. So we don't know if it's necessarily official documentation, but it does go to show you what they could be preparing for. And that includes an exit of Greece from the Eurozone. This would be a major impact in the short term, but ultimately would represent a stronger Eurozone because the weak need to leave if that's the case. But they knew this as they brought them into the Eurozone. They knew what it would bring and that they could not withstand this over the long term. So bringing them in had nothing to do with the union they're trying to form. It's all about this global governance that they like to talk about. It's all about the technocrats controlling them, and they have been sucking Greece dry. They have been taking everything from them, and it has been unfortunately working very well for these technocrats. So we're going to move on right here and looking at the CPI, because when we look at the real indicators, we need to see what is been increasing, what has been decreasing, and we see that expenditures for individuals have been increasing year over year, month over month. And this is not just in the US, it's not just in Canada, but in this instance right here, France-consumer-price-index in a practically straight line upward increasing. But we know that the government numbers are all fraudulent. We know that they're understated. So we can only imagine how fast and high this is really going. We're going to move into the disparity right now. Manhattan apartment prices hit a record high. I can't even believe this, but the average apartment price in Manhattan hit a record $1.72 million in 2014. New York wealthy and overseas rich continue to seek safety in the New York skyline. So when you have a crash in real estate or any other sector, you need to realize that it doesn't necessarily take effect to different degrees in different regions, different areas. And that's definitely certain in Manhattan, where the prices are hitting all-time highs, being unreasonable for any average investor to get into, or even people to buy their first home. That's why they're getting into these micro lofts, these shoebox apartments, and even those are ridiculously expensive. It just goes to show you how things work. You have a crash in one area, doesn't necessarily affect the other areas. It is really quite dynamic. We're going to move on right here to a similar article showing you that Rolls-Royce is doing very well. They sold a record number of cars last year, breaking through the 4,000 mark for the first time in its 111-year history. They are doing the best that they've ever done. The luxury car maker sold 4,000 cars, up 12% on last year. And by the way, that last year did very well, and marking a fifth consecutive year of record sales. That's right, they continue to beat out the records while we have turmoil, while we have all of these problems that are going on in the financial markets. We see people being able to buy homes in Manhattan at these record prices. We see Rolls-Royce doing better and better and better. At the same time, all of these other indicators show poverty. You have massive amounts of unemployment. You have no idea how many emails I get from people all over the world that are contacting me, telling me about the unemployment rate in their countries. They're telling me about all the turmoil that is occurring in their countries. It's not just in the US, it's not just in the UK. You need to realize that this is going on everywhere. We're going to move on right here, and I want to show you this. Afghanistan sets record for growing opium in 2014. If you want to know where our money's going, it is being abused, it is being squandered, and one of those places is in Afghanistan, where they are guarding and protecting the farmers growing the opium, and they're now the largest opium grower in the entire world by far. You can see how this has been going up considerably, particularly since 2001, where nothing seems to have happened, and all of a sudden we have massive amounts of opium production, and then of course it gets shipped over to your doorstep. So one last thing right here, I just wanted to mention that in July of 2007, the Bank of England didn't know, apparently, that there was any sort of problems in the system. And this goes to show you how real things are when we talk about the real situations, and then it's always after the fact that the economists come out of the woodwork, the central banks come out and have to admit it. It's only after the fact. Well, this is Northern Rock, the people waiting outside in lineups because they're in fact doing a bank run. And this is just one example that occurred. But this could happen widespread across the world in major cities, and they will undoubtedly just shut the doors to the banks. That's why I say you have to take your money out of the banking system other than what you need for your daily transactions, your bills, etc. But you never keep your savings in the bank. It is excessively dangerous. You need to use that in order to pay down your debt, including your mortgages, and you need to basically get into real assets. It is most important to pay off your debts, because those who hold debt are going to be crushed. There are many reasons why. I've talked about it before. I talk about it on the Insiders, talk about it to those who email me, and I will continue to bring out those videos. One I just did recently, if you haven't seen it already, take a look back, just a few videos about paying off your debt. Now, if you found this video informative, I would really appreciate a thumbs up. It helps me out a lot personally, as well as it helps to get this word out to the other subscribers on YouTube, helps me pull my videos up a little higher. So I would definitely appreciate that. And of course, don't forget to become an insider. It's where I give out all my best intel for free that is available at themoneygps.com. You just scroll down to the bottom, fill in your email address, and you get occasional emails from me with good, short, concise info.